Good morning, everyone, and welcome to the PivotBoss pre-market video for Thursday, March 23rd, 2023. I am Frank Ochoa, aka PivotBoss. Happy Thursday, everyone. Here's a look at the ES in the daily time frame. This is post FOMC statement and rate decision. In the previous session, we got ourselves new FOMC key levels here. 40, 33, 75 for the ES. Initially, price rallied here, kind of a higher high failure, and then sold off late in the day. Big time outside reversal, sell signal at these highs. You'll notice the rejection also comes right near the zone we talked about pre-market yesterday, right around the 40-80 zone. That was right where price turned down earlier this month. Turned down right off that area, the previous month's midpoint. That was the breakdown point from before. Very aggressive, sharp turn down from that zone. Which leaves us with the idea that any pullback this morning could be an opportunity for bears to sell into morning strength for a shot at afternoon weakness. So looking at an inverted check mark trend day down. Right now we've already seen a little bit of strength here and starting to see a little bit of toppiness here early on. That still may not be the high, but we're looking for any morning strength here to be defended here by bears for a shot at new lows up ahead. If that plays out, we could be looking at a swing move that takes us back to 38.50 for a retest of support in the previous year's close price as we stay within this distribution here. So again, sharp rejection yesterday after Fed. Could be looking at more weakness to the downside. Since the initial move was a sell-off here away from 40.33, at some point here we'll see a move downward, and once that move finishes with a strong rejection, we could bounce back and return back to that level at some point in the near future. Alright, let's take a look here at the NQ. The NQ had a similar response here to the FOMC in the previous session here. You can see the Fed level coming out here, 12.925. A little bit of a rally, higher high failure, and a drop into the end of the day. Again, early selling pressure here likely to come in after strength. Early strength here met with selling pressure that could lead to inverted checkmark trend day down. So watching for signs of a rejection here early on. Ideally, bears will keep price at or below the previous session's midpoint. If price starts to really push through that previous midpoint and find acceptance, we could be looking at a day that takes us higher through that mid. So the midpoint's going to be very important. Now, this rejection that we're seeing here today at the 13K level, that's right where we discussed pre-market yesterday. The 13K level, very important here, and we've already seen multiple failures and rejections at that level. Yesterday was just another example of that. If price continues to see this point as a rejection here, then we could return back to the bottom of the range here. That's about 11.8 as the price stays within this market structure here. So again, any pullback this morning could be an opportunity to sell it for a shot at seeing a swing move as low as 11.8 up ahead, at least on a near-term basis. Taking a look at crude oil. Crude oil down about 0.5% at the moment, trading 70.5. The 70 level, very important here. That's the previous year's low price right here. You can see how price drove through that, got as low as 64.36 and it's bouncing back. Can price find a way to squeeze back through 70? If so, 77 could be a good medium-term target there, and then we may see a return back toward 80, half as the previous year's close. Again, 70 is going to be very important. A failure to get back above that zone opens up the potential to go retest those lows. So 70 continues to be the key level to watch in crude oil. Taking a look at gold futures, gold up about 1.25% at the moment. You'll notice here that this one rallied through the 2000 level and found a pretty sharp rejection, dropped, and after yesterday's Fed announcement here, price actually rallied away from the Fed level here, 1950.2. Currently seeing a little bit of a higher high failure at the moment. Multiple responsive tests at the previous session's high where each one has been turned back down. We're now sitting back below intraday VWAP and also right around the previous session's close here. So keeping an eye on this. Again, given the squeeze yesterday, as long as price remains above the midpoint of yesterday's session, we could be looking at an attempt higher here. But again, keep an eye on 1960. That's been a big time key level overall. Price really hasn't had the ability to stay above that level for long before a rotation back down occurs. So if I bring 1960 across this way, you'll notice how often price gets above that level but then just fails to materialize through that zone. And once it falls back below, there's an opportunity to return back to around the 1830 level. Lastly, taking a look here at the YM, you'll notice the YM has a different type of trajectory than the ES and the NQ. Bit of a rounded top developing here. Yesterday's outside reversal here, kind of marking the right edge of that rounded top. This is also a breakdown point, right? We got the breakdown here. This is the retest right at 33K. We wanted to see how the market was going to respond to 33K yesterday, and mentioned a rejection there could begin to take us back down to recent lows, but also to new lows up ahead. And so far that's been in play. Big outside day reversal yesterday after the release of the statement and the rate decision here. And again, any morning strength here could be seen as an opportunity for bears to defend for a shot at new lows and a continuation back toward near-term support 31,640, but also likely through that level. So right now, looking at the potential for another rotation down over the next 1 to 5 days up ahead, and perhaps more if that move does materialize. All right, that is it for now. We'll see how this plays out heading into the new day of trading. Good luck, trade well, and I'll see you in the trading room. Take care.